make it happen.
Let's go to the Chicago Mercantile Exchange now, where we are joined by Alan Nuckman. He's Chief Market Strategist at Agora Financial. Alan, always great to see you. Thank you so much for joining us. Let's begin
Great to be with you.
Let's begin with the price of gold. What's going on there? It wasn't that long ago that it was hitting $13.50 on the upside. Now it's way below $1,300.
Right. Well, in the past, if you remember the last months and the last years, you and I have been talking about my optimism for oil from a reward to risk standpoint, that I saw that as a good value because it was so beaten down and battered and forgotten about. Well, the same is happening with gold right now. Gold fell below that $1,300 an ounce level, and it's just been ugly from a technical standpoint until yesterday. Yesterday, we made new relative lows, new 2018 lows, and had a higher close. That same thing happened in the euro currency, meaning the dollar may have topped out in the near term. Now, I think gold in the long run has a lot of potential. Like you said, it was not that long ago that we were at the top end of the range around $13.50, $13.70. So from a value standpoint and from a macro standpoint, I think these metal markets have more upside, and it's a sector that's been slumping.
The U.S. dollar versus the Dixie index has rallied sharply since the middle of April. That's got to be a factor here, is it?
Yeah, I think that's put some pressure on the gold market. But now we've seen the dollar have this bounce. I'm not convinced that the trend has changed. Let's remember 2017 was nothing but straight down in the dollar index. And if you look at the action, a lot of this has been the focus because our interest rates are rising here in America. Well, yeah, they have to rise, and I look at that as a positive. It's a positive report card. If you can raise rates, that means the economy's doing better. So you look at that from a positive standpoint. So you're seeing rates rise, the dollar strengthen a bit, but I think it may be a bit overdone. It had a little bit of a short squeeze, got a lot of people captured, and so now we'll look to see where it goes from here. But it's very interesting that we made those new relative highs in the dollar and then a lower close yesterday. Let's see where we are by weekend, because if the dollar stops going up, that could be very, very helpful to the gold market.
Let's move to oil. We've had a strong rally in the price of crude oil. We're now better than $72.50
right.
U.S. How much more room to run, if any, is there in this oil rally?
Well, I'm not going to call the top in oil for sure. People thought it was expensive when I talked to you at $40, $50, $60, $70. So it's a strong trend, and you can see the global growth is the story here. It's not the supply side. We know that factor. We know Canada, we know America is just pumping it out. But it's the global growth that's sopping it up, and that's very much a positive. Let's remember that crude oil rallied against this strong strength in the dollar, so that's very much a positive. So it also supports the stock market, because the stock market had a lot of oil stocks and energy stocks and a lot of Canadian stocks that had not done well in the last few years as commodities have suffered. Now, as a young trader, for me, it's always come back to commodities. It's the underlying commodities that set the tone. Now, that may have changed in the last couple of years and the last couple of months because we've seen extra volatility. But I think now that the macro market has settled down, I think people are going to realize these commodities prices have a lot more upside potential. I still think oil needs to get above 75, which is the halfway mark of the all-time highs above 110 to those lows below 30. So that's just the halfway mark of this last major move. We still have a lot more upside potential, but from a reward to risk, I like gold better at these levels because it has more room to rally.
Interesting. On oil, you place your emphasis on global growth and demand. What importance do you put on geopolitics, specifically Iran and Venezuela?
Well, we've always talked about that for the last 5-10 years. There's always been that underlying threat of price shock potential. Whatever happens in the world, obviously, could be a positive for oil. So there's always the potential for something to happen. It's not like one day we're going to wake up and all of a sudden, you know, billions of barrels have just come on the market. But you could see some sort of disruption that takes oil off the market, and that could only be a positive. So it has the potential to shoot up at any time with any, catastrophe that happens around the world. As far as Venezuela goes, they're at decade lows as far as pumping goes. Iran, the sanctions could hurt them. So there are a lot of variables that can always support the oil market. Let's focus on the dollar, and I still think, that the trend is strong, just like I think the trend in the macro stock market because of the global growth. It's not just the U.S. stock market. We just had the FTSE in London make new all-time highs. So it's a global phenomenon. Everybody everybody's in the growth phase, and that means more consumption of oil. And again, that's another positive. The more consumption of oil, the higher price oil goes because of that demand. That means the global economy is doing better.
And you touched on this earlier, and I think you were just getting to it right there as well. You believe that the normalization of markets, the increase in interest rates, the return to health of economies is essentially good for all commodities, correct?
Yeah, and I think commodities is a sector that's long been forgotten about. Let's remember we were in a commodities super cycle maybe 5 years ago, 10 years ago, I guess, and things have really stalled out. You can see some of the agricultural commodities are starting to come back to life. We're always one growing season away from price shock there. So we've had a couple of good seasons. Everything went smoothly. The Mother Nature is always the variable there. You can see copper prices rising. Silver never sold off like gold. We've got oil rallying. And let's talk about your Canadian currency. I like where it's going. As the commodities rise, the Canadian currency does better. I think the Australian, which is also another commodity currency, is lagging behind a little bit. Look for that to catch up and rally a bit, but I'm looking for your Canadian to get back above the 80-cent level once again.
Alan Nuckman, thank you as always. He's Chief Market Strategist at Agora.